Hello guys, welcome to iTutor Academy. In today's session, we will start with Unit 11, that is Variance Analysis of MMPC 004. So let's see the objectives of this chapter. This unit aims at acquainting you with the ways in which the management can monitor and guide the operations of a business to meet the desired goals, particularly in respect of cost and sales, helping you in identifying the factors responsible for deviation of actual performance from the standard performance and in taking such a remedial measures as may be necessary. So let's see the structure of this unit. There is an introduction part is there, meaning of variance, cost variance, direct material variances, direct labor variances, overhead variances, sales variances, control of variances, variances reporting, summary is there, keywords are there, self-assessment questions or exercise section is there. So let's begin with the introduction part. Profit making is the primary objective of business enterprises. Profit depends basically on two factors, cost and sales. In order to achieve better performance, it is necessary that you lay down your target in respect of both of them. Your objective should be to maximize the sales and minimize the cost. This will result in maximization of the profit and in the long run the wealth of the firm. So variance analysis is intimately connected with the budgetary control, which helps the management in planning future activities, comparing actual performance with the budgeted performance and identifying the variance as to their causes and ensuring that remedial measures that are taken at an appropriate time. And let's see the meaning of variances. Variances is the difference between budgeted and the actual level of activity. Since as explained earlier, the profitability of a business depends both on cost and sales. It is important to analyze both cost and sales variance. Cost variance is the difference between what should have been the cost, that is popularly termed as standard cost, and what has been the cost, that is actual cost. If the actual cost are less than the standard cost, the variance is termed as favorable. That is, however, if the actual cost is more than the standard cost, variance is termed as the adverse or unfavorable. Sales variances is the difference between what should have been the sales, that is popularly termed as budgeted sales, and what have been the sales, that is the actual sales. If the actual sales amount is more than the budgeted sales, the variance is termed as favorable. That is, however, if the actual sales amount is less than the budgeted sales, the variance is termed as adverse or unfavorable. Thus, vacancies may be classified into there is cost variance and there is sales variance also. So let's see the cost variance. Cost variance are also the three type, that is direct material cost variance, direct labor cost variance and overhead cost variance. Direct expenses constitute an insignificant portion of the total cost of the product. Hence, direct expenses variance is generally not calculated. Suppose it is desired to calculate the direct expense variance. In that case, it can be computed in the same way as the variable overhead variance is calculated, since in most cases direct expenses are variable. At this point, however, we suggest that you have a look at Exhibit 11.1 given towards the end of this unit, which present a bird's eye view of all the variants discussed in this unit and their interrelationship also there. So we will discuss that on and whenever you are in doubt, a reference to exhibit may prove helpful. Okay, so abbreviation for different variants is also here. You just go through your Ignou material. Okay, so direct material cost variance is DMCV, that is the abbreviation of that. So you just go through one by one. It will help you for your just short note preparation time. And direct material variances. So three type of direct material variance as explained here. The first one is direct material cost variance, which is equal to the difference between the standard cost of direct material specified for the output achieved and the actual cost of direct material used. The standard cost of material is computed by multiplying the standard price with the standard quality of actual output, and the actual cost is computed by multiplying the actual price with the actual quantity. Formula for computation is here. Direct material and total standard is there. Cost variance is equal to cost for total actual cost, and that is actual output. And so this is the equation for that same. Okay, so you just refer your Ignou study material MMBC 004 unit 11. Okay, and if standard output and actual output are different, as in this case, the variance are to be calculated keeping in view the actual output. The information regarding standard output which is different from standard quantity is thus not relevant. And direct material cost variance, also direct material price variance is there, direct material usage variance is there. Okay, and direct material price variance is concerned with the portion of the direct material cost variance which is due to the difference between the standard price specified and the actual price paid. Direct material price, that is equal to actual quantity into standard price minus actual price. And direct material usage or quantity variance, that is portion of direct material cost variance which is due to the difference between the standard quantity specified for the output achieved and the actual quantity used. Formula for consumption, that is direct material usage variance DMUV is equal to standard quantity for actual output minus actual quantity into standard rate. Okay, so that is the equation. The reason for direct material usage variance may be as under: inefficiency and lack of proper upkeep and maintenance of plant and equipments, and a frequent breakdown during production process leading to wastage of material, and non-consideration of product design and method of processing, etc., while fixing standard, incorrect processing of material resulting in wastages, non-recording of return of material to stock or stores or inter-transfers from one job to another, and improper inspection and supervision of workmen resulting in adverse quantity variance due to careless handling and processing. Too strict supervision or inspection resulting in excessive rejection of materials, and the substitution of specified material with unspecified materials causing greater consumption of the latter, and price variance could be favorable because unspecified material is likely to be cheaper, and incorrect setting of standard or leading to variations, and excessive wastage, scrap, spoilage, shrinkage, leakage, etc., causing an adverse usage variances. And computation of various direct material variance illustration is here. You just go through this illustration with the example, and activity section also here. It will help you for your more understanding. Okay, and next is direct labor variances. The deviation in cost of direct labor may occur because of two main factors, that is difference in actual rate and standard rate of labor, and the variation in actual time taken by workers and the standard item prescribed for performing job or an operation. Labor variances are very much similar to material variances, and they can be very easily calculated by applying the same techniques as used in calculating material variances. So illustration section is also here, and direct labor wages, that is rate variance, it is the portion of direct labor, that is wages variance, which is due to the difference between the standard or specified rate of pay and the actual rate paid. That is formula for computation. Direct labor rate is equal to actual time into standard rate minus actual rate. And variance, if the actual rate is higher than the standard rate, it shall result in an unfavorable variance and vice versa. Okay, so the reason for direct labor or variance may be there is deployment of more efficient and skilled workers, giving rise to higher payment, and higher payment due to shortage of availability of labor, and lesser payment due to abundant availability of labor or high competition among them for employment, and employment of unskilled laborers causing lower actual rate of pay, and extra shift allowance to workers or overtime allowance, and higher piece rate for better quality production, and change in the system of wage payment, and change in wage rate probably due to revised agreement with the labor union, and a higher rate during seasonal or emergency operations. And direct labor efficiency, that is time variance, is there. Formula is there: labor efficiency is equal to standard rate into standard time minus actual time. Okay, and a verification also here, labor rate variance plus labor efficiency variances. So illustration section also here for the same, so you just go through it, and in case any doubt you can just contact us. We will reply you through our contact number. Also you can comment it on our comment box also. Okay, so this is about today's section. Next section of overhead variance we will discuss on next video onwards. For more videos of MBA Ignou classes, you just do share and subscribe our channel. Thank you so much.
i-tutor ES presents Ignou MBA complete syllabus coverage classes and individual semester base subject coverage program for MBA students online and flexible sessions. For more details, contact 62382 17885.